All right, good afternoon, everyone. Futures Barizio here. It is 2:30 p.m. on Friday, October 10th. Hope everybody has had a great day and wrapping up the week. Sorry I did not get in here yesterday. Not really too much yesterday, anyways. But I just want to come in here, a quick wrap up a little bit. We'll just go through a couple of markets. So as always, make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them down below. Okay, so first thing I want to do is just look at COT. So if you're in the U.S., you certainly know this, and if you're not in the U.S. and you're watching this, you may or may not know this, that the U.S. government is currently in a shutdown due to disagreements in Washington on budgets and stuff. So we're about 10 days into it. So the commitment of traders data has not updated now well, it will be 2 weeks this afternoon. Because as I mentioned, the data comes out late afternoon on Friday. It's the data is as of that Tuesday, but it doesn't get published till Friday. So in about an hour or two from now, normally we'd be seeing the update, but we haven't seen an update in what will be 2 weeks because that's how long we've been on the shutdown, almost 2 weeks. So we're at a little bit of a disadvantage in terms of COT, in terms of this index number and just the raw COT that you see down here, the regular commitment of traders line graphs here for the three main categories of traders. But concentrating on this, if I scroll up here, if you can see this little red dot here in this is where I'm looking here in this this extreme short area. See this little dot right here? That's the last update. And if I put my cursor there, you can see down at the bottom of the screen it says September 23rd in black. So that was the last update. So right now that should say September 30th. And then in about 2 hours, that should update to October 7th, but it's not going to. So we really don't know where the COT is right now. So we're at a little bit of a disadvantage in the COT because we're not getting updates. And until the government reopens, we're not going to get that information. That's because, again, the COT data is a U.S. Government agency. The Commodity Futures Trading Commission, CFTC, is a federal government agency, a financial regulatory body. And so if they're not working, then we're not getting the updates. So we're going to have to just wait and see. I don't know how long this will go on for. But in terms of, using COT, we're flying a little bit blind right now because we don't really know. I mean, you can kind of project based on momentum of what direction things were moving, but we really don't know. And so that's unfortunate. So we have to take the COT data with a grain of salt because, again, it's almost 2 weeks behind right now. The seasonality, of course, is still viable because that's only based on price, so we don't need any updates on that. So other than price. Okay, so we'll talk really quick first as we got this open. So this is Australian dollar. As you know, I've been bearish on this. I've taken a couple of shorts. I've taken like 3 so far. 2 were winners, 1 today, 1 early this week, and 1 loser. There was some Australian or New Zealand dollar news that came out earlier this week that caused like a big drop during the Asian session, but then it pulled all the way back during the London session, and I was stopped out during that London session. So I just been sitting on the side, but I got back in today and, more than made up for that today. So I'll show you that trade in a second. New Zealand dollar is pretty much the same thing. It was kind of like flip of a coin, which one to take. I just thought the setup was a little better on the Aussie dollar versus the New Zealand dollars. That's the one I took. And you guys have also know that from a standpoint of commercials, commitment of traders, at least what we have for the last 2 weeks ago, is that the British pound I had as being bullish on because we were coming out of this extreme long area right here. Again, I don't know where it sits right now because we haven't gotten an update, but I was waiting for the British pound to start moving up. I have not taken any trades on it because it's really just been going down since then. So we're going to see if eventually we get a turn higher here. We might just have to, ride out a little bit more, unless this COT has really dramatically changed when we start getting the data again. You know, this market is pretty good about, you know, moving in the direction of these extreme positions. So since we're in an extreme long position up here, we had a couple of weeks where price kind of went up and then went sideways for 3 or 4 weeks. So now that it's coming out of this area, I'm hoping we get more of a push up, but it hasn't happened. So I haven't taken any trades in the pound. Okay. And then I created this little spreadsheet, but you can just see here. So Aussie dollar, New Zealand dollar, Great British Pound, COT index right here. Seasonality doesn't really play into these. That's why I have NA. And then again on soybeans. So the soy complex, essentially seasonality is up. We have a little bit of neutrality on the COT index, which basically is because the seasonality for these is the COT on these, if we go to grains here, is kind of sitting in that middle area, that white area between the extreme long and the extreme short. And so that's why I have them as neutral. But like I have neutral up on soybeans because the last extreme position was the extreme long position. So as it comes out of that area, I expect to see higher prices. But I'm calling it neutral up because of the fact that it is in this white area. But again, we haven't seen an update in 2 weeks, so I really don't know where it stands. And we're just going to have to wait. And so that's the case with soybeans. The whole soy complex seasonality is up. Rice, I'm not trading. It's been down. The market's down. I don't know whether I'm even going to trade rice, but I'm watching it for now. But the seasonality begins to shift bullish in November. So I'm probably just going to, and we do have a little bit of a conflict between the COT data and the seasonality. So I'm not trading rice right now. I'm just watching it. And maybe next month, if we start to see a positive shift up, maybe, and we'll have data hopefully by then, maybe start looking at rice long. But I'm not touching it at all right now. And corn is up, both seasonality and COT index. However, corn's been getting hit too. So we're going to have to see, this is a good experiment here, especially looking at seasonality to what these markets are actually doing right now. And so we're going to look at the charts and talk about that. So just to show, this is the trade I took on the Australian dollar. You can see I got in this morning. You can see the entry right here. Okay, this was at, I think it's right around open or 12 o'clock. So it was at 8 o'clock New York time this morning. And, we've been trading down. We had this pullback here. We had a little bit of move down, and then market went sideways during the pre-morning, pre-New York hours. And I just jumped in right there. I put my stop up here. I just said, I'm just going to leave it. And then, boom, we got this huge drop. I got out of this about an hour and a half ago. You see, I closed it. I don't want to hold this into the weekend. And you can see it's Friday afternoon. Prices are basically going to, just kind of trail off. But that was a really nice trade. And this is base. Yes, technically this market is down. But the confidence behind it was not just the technicals, but the fact that the COT data suggested lower prices too. Okay. The New Zealand dollar took an equal drop right here. I got this Fibonacci on here, but you can see that took an equal drop. This was the same time period right about here. Like I said, I flip a coin, take either one. But the the Australian dollar actually ended up, even though the technical setup is the same, the Aussie actually ended up being a little better anyways. And then British pound, like I was telling you that we were looking for longs on the British pound. We had been trailing down on this. We zoom out on time frame here. Here's the 4-hour chart. Let me just clean this up and just get all these lines off here. All right. And so, but maybe we've turned the corner now, because if this is the 4-hour, we go to the 1 hour, we had this pullback, makes a new low, and then boom, we had this earlier in the session, we had this big move higher right here. Okay. And so is this the shift, to the long position? Quite possibly. Now I would love to see it break another swing level. This is, another swing level sitting right here, on this hourly chart. So yeah, it would be nice to see this go up and smash through here. that would give me extra confirmation, but I'd be willing to trade it just off this level. So what I'll be looking for, obviously not today, is, some kind of pullback, assuming that this is the high of this move up. I don't know if it is yet. Maybe we'll come up to here and then pull back, but wherever this high ends up being before we get a nice pullback, I'll look for probably a 50% at least pullback. That is actually, if this does end up being the high, this 50% level actually lines up pretty nice with, this previous pullback level. So, right. So former, support former resistance now becoming support, right? So prices come back towards this level anywhere here, or, here to the 61.8, anywhere in here would be a nice place to look for longs. And again, as long as we hold this low down here, then, we'll see, because we have now broken market structure. It's 1 hour structure, which isn't the best. I prefer a longer term, higher time frame structure, which is probably more like this one right here. But still, this pullback led to a new low, and this is about reasonable because you can see all these previous moves, like this one here was 65 points, and this one was 57 points, so it's pretty close, right? This one was, which one did I just measure? Was it this one? 66. This one is 66, right? So we're in the ballpark, right? So we're the amount that this moved is pretty comparable to these previous moves. Now, this one's obviously longer. So a 57-point move is certainly, to me, a viable move to the downside. And we have not seen structure blast through here like this, prior to this move right here. So in terms of this breakout here above, let me get rid of this fib. This price getting through this level, this previous structure swing, is pretty important. Okay. So anyways, and that would be based again on the COT data. So, and again, we haven't got an update, so I don't really know where it actually stands, and I don't really use seasonality on currencies. So, but based on the latest the COT data we do have, this is pretty much what I expected. I didn't trade it today because I decided just to stay with the Australian dollar. This move happened a little bit later. This happened around 10 o'clock this morning. Quite frankly, I actually wasn't home at that time. Went out around 9 o'clock this morning. So I probably would have missed a lot of it, but it's okay, because if this is really reacting to the COT data, this is going to have a big move to the upside. Okay. So I will be watching this next week for potential entries on this to the long side. If we get a nice pullback, wherever it happens, whether it happens here or whether we get more run up to this level, there'll probably be some resistance and some selling from this zone. If we go to the 4-hour chart, this is a pretty reasonable zone, pretty much anywhere like right in here. So it may not get here before it pulls back, but if it does, I wouldn't be surprised either. And then look for some sort of at least a 50% retracement back. Okay. So again, that's pretty much it for currencies. For the grain complex, let's just switch over to TradingView, and we can look at the longer term charts instead of just the current contract charts. So let's look at corn first. So this is the 12-hour chart of corn. Now, again, seasonally and COT wise, we're looking at higher prices here. You can see we have been going down. This was, moved basically last week, right in here. And the last, really this entire week, the last 3 days we've been down. And that followed 2 very weak bullish days. So let's see what happens. I have this line drawn here, to see whether we're going to break through here and keep going higher. This will be a good test, right? Because from a technical standpoint, this market is down right now. So now we have fundamental data in terms of commitment of traders and seasonality saying, hey, we should be getting higher prices now, but the market is not actually doing that. Now, there's no guarantee on any of that. I mean, you can go back and look at historical price charts, and a lot of times you'll see that where the seasonal stuff gets blown up. any particular year can just completely ignore it and go the other direction. But over time, those odds play out. So is this going to be one of those years where it doesn't play out? Well, quite possibly. Um, I was in a corn trade. I think I showed you guys. I was holding it for days and days, and I got stopped out of it this morning. It wasn't a big loss. It was a couple of micros. So I didn't take a big loss on it, so I'm okay with that. But it was a little frustrating because I held it for so long, hoping that it was going to turn, but it didn't. And really push higher. It was in profit for a few days, small profit, and then it just kind of chopped around and went lower, and then I thought it would come back, and it didn't. So I'm out of that trade now, anyways. So now it's just wait and see, and I'm not going to trade this at all right now. If I'm going to trade technically now on this market, I'm going to wait for it to come back towards this trend line, and then I'll trade it again. I'm not going to try to catch a falling knife here. I'll use like the 4-hour chart or whatever and wait for this to come back up. And so this becomes our structure swing area here. As long as price stays either below this trend line or certainly below this level, then technically we're still bearish. But remember, the COT and the seasonality is bullish. So we do have a conflict between technical price and fundamentals. So let's see what ends up happening next week. Okay, and it's kind of the same story with the rest of the grain complex. So here is soybean meal. And again, just to remind you on soybean meal, we look right here. The COT index actually is neutral down based on the last update. But again, we have old data. And so, we're in that kind of that white shaded zone coming out of an extreme short position. So let's, we don't know where that is now. Seasonality, it's up. Really, seasonality is in our favor from about now through early January. So again, let's just see if we get this, if this is just some kind of like pullback now. We did get, a little, this 4-hour swing right here made a new low, and now we've come up and we've taken this area out right here. We came up to the trend line, but you can see we kissed this trend line perfectly, and now we're riding along it back to the downside. So again, from a technical standpoint, we have a downtrend unless, we have some really super bullish move higher that breaks through this trend line and breaks above this structure area right here. But from a seasonality standpoint, we have a bullish market. Okay, so what's going to win out? I guess we're going to find out. And soybean oil is the same thing. It would beat a dead horse. Here's soybean. And again, this is the 4-hour chart. We zoom out a little bit. Here's the 12-hour chart. And you can see, it's holding this trend line perfectly and to the downside. So those would have been great shorts. I did not take. Soybeans, again, from soybeans, we have neutral up on the last COT update, and we have seasonality up, okay? Much like soybean meal up through January. So again, the question is going to become, what's going to happen? Is this going to be a year we ignore the COT? Or are we going to just eventually, kind of resume this up move here? If we zoom out here, we had this downtrend. We came up, broke this structure, but now you can see we've had a significant move down. And this is a long time frame. This is a 12-hour time frame. So let's see what happens next week. And again, but much like the soybean meal, I wouldn't consider any shorts. I'd want to see this pull back into the trend line again and get some bearish price action. But I will be very cautious. If this does not make a new low prior to the pullback into this trend line, because you see we're making new lows as we come back to the trend line. We had already made a new low and came back, made a new low, came back. So now if this time we don't make a new low, which probably one more trading session to get down past this low. If we don't make a new low and we come back again towards the trend line and break it, that may be the shift, on the bullish side. So we'll have to just wait and see. So this is what I mean, guys, where you're combining technical price patterns and price action with the seasonal and commitment of traders. Again, it would help if we had the COT data up to date, but we don't. So right now I'm just kind of flying on the seasonal data. All right, and then lastly on the soybean oil, again, pretty much the same story. We zoom out to a higher time frame. You can see this one I have marked off, but it's the same thing pretty much with the whole soy complex, but this one I have annotated a little bit. You can see right here I have a seasonal low data. So this is September 30th. And if you look at the seasonal chart, you're going to see the end of September, beginning of October is when price tends to turn seasonally and go higher. So we had this high, came down, made this low, pulled back, a little weak pullback, tried to go lower, and it failed. We did not put in a new low. We came back to the trend line, sold off again. So now we're back to this situation where if we take out this low right here, then that probably means we're going to go lower, okay? But if this turns out to be a higher low and then this is just, technical selling off the trend line, then let's see what happens. If this area holds, we don't put in a new low, much like what I was just talking about with soybeans, and we don't put in a new low, and we come down, even if we come down a little bit more, as long as we don't take out this low and we turn and bust through this trend line and certainly through this structure level right here, then that would put the seasonal pattern back in our favor again, okay? So either way, I'm not trading this until it either breaks the low and then comes back to the trend line again, and makes, if it makes new low, comes back, then I might consider looking for another short off the trend line. But if we don't put in a new low, we don't get past this, basically, this zone right here. You want to put a little rectangle on this area. This is kind of the area I'm looking to hold. Actually, we just tighten this up a little bit because that previous low. So, basically this box right here, if price is held inside of here, either doesn't get to this point or even if it comes down here, but as long as it holds inside of here and then turns, then we get bullish price action back up. That could be our key to the seasonals kicking back in to the upside, okay? So that's what I'm watching right now. So this is a seasonal low, and this on the seasonal calendar, and that is pretty much the same with the entire soy complex. This happens to be soybean oil, but like I said, it's pretty much the same on soybean meal and soybeans and soy oil. And like I said, with corn, we're just flat across the board. We're in a bullish position. However, price has been down, so we'll have to just see whether corn eventually rallies off of this area or not. The downtrend hasn't been broken, even though we've been drifting lower here since really mid-September. We hit the high, and we've been drifting lower since then. We're kind of sitting at lows right here. You can see price poke through. We had this little quiet area right here. Price kind of poked through it. One candle came up, came down. Now we're back to it again. If we just look at like these previous lows back here, there's obviously a lot of liquidity right in here. So let's see what happens. Technically, again, we haven't, even though we've been drifting lower, we technically have not violated the uptrend yet, just looking at the longer term pattern, but not looking particularly great right now. So, but again, the COT data and the seasonals are on our side for sure. And so I'm still relatively confident, as confident as you can be when it comes to the markets, that this will go back up. But we'll have to just, we'll wait and see. I don't know if ultimately it's going to hold or if we'll end up, breaking to new lows and the seasonal pattern gets thrown out the window this year, which could be the case. But I'm going to wait for some technical confirmation on this either way. All right, so that's where we're at now. I'm going to just skip natural gas and crude oil right now. We're just going to stick right now to the currencies and these grain markets. That's enough to look at and consider. And so next week could be an interesting week, in these grain markets if this stuff turns and starts to go back up. And one thing, an interesting point, we talked about the fact that the seasonality is up. So this is soybean oil. And you can see this green dot right here. This is where we are right now. You can see this green dot. This is where we are as of, this was as of 2 days ago. This is October. I don't think it really matters. We're somewhere in here. But you can see while the seasonality is up, this is what I'm basing the seasonality on, right? This general trend up. There are these little pullback areas. You can't completely ignore these because this is a longer term view. So is this what we're seeing right now? This pullback in corn is just based on this. There's this little dip, and maybe this little dip kind of repeats every so often. It looks like it does. It repeated on this blue line, it repeated down here on the green line, not so much on this gold line, which is the 15-year. So, and then it looks like we get a solid run up for, a couple of weeks, and we have another little dip here. So will we get another dip in the market here? I don't know. Let's look at corn. I don't know if we have the same type of thing on corn, but let's look at the corn seasonal. I'm just showing you that, yes, in general, they're going up, but, and again, kind of the same thing in corn. You can see, we have this uptrend, but we have this little dip here, on really all three of these. Here's the blue line. We have this dip that kind of corresponds to where we are right now, right? This general tip down, even though the overall trend is up. I mean, these things look like moving averages, right? Or choppy moving averages, but overall we have these little dips, but the trend overall is up based on the seasonality. So is that just noise? Is this that those moves that we're seeing go to the downside right now are just noise because you're using a short time frame? When overall the market is up, and that's what you should be focused on, and not get caught up in those down moves, even though they look really juicy to trade on a shorter time frame. And I'm not saying you can't, but as long as you're in rhythm with the market to understand that the seasonal and the commitment of traders points in the opposite direction. I haven't been using this long enough to be comfortable necessarily going against it yet, but this is going to be a really good test for me personally as a trader about, is the bigger picture still intact, and it's just the smaller picture that is going to have those ebbs and flows. But also understanding that there's going to be some years where the seasonals don't work at all. The seasonal says up and the market goes completely down during that entire time. That is very much possible, or maybe the uptrend is delayed, Instead of turning the beginning of October, it doesn't turn and go up until November. Eventually you get that seasonal turn, but it's delayed by weeks. And that's why you have to be flexible. So, and nothing is carved in stone and nothing's 100%. You have to take this kind of data, marry it up with what you see on the charts, and, make your best decision based on that. So anyway, so I think I'm going to leave it there, guys. That pretty much wraps it up. Again, we're not going to get COT data today. So as we go into next week, we're not going to have anything other than seasonality and price action to guide us in these grain markets. So we're just going to have to wait. Eventually, the government will reopen. I don't know how long of a delay it'll be once it does reopen before we get our new data. But we're just going to have to put the actual COT data aside right now because it's now 2 weeks old and it's getting to the point where you can't really rely on that because we don't have any updates. So we'll just count on seasonality right now and price action. And in the currency market, I still feel pretty comfortable based on where the COT was before we stopped getting the data. I still feel pretty comfortable about the COT continuing in the same direction, which is down on the Aussie and the New Zealand and up on the British pound. So even though we're not going to get an update, to me personally, I'm still comfortable with those directions, which is where I will be looking for trades next week. So, all right. So that's it, guys. Make sure you smash that like button, subscribe to the channel on your way out. Questions or comments, leave them down below. This will be posted today sometime. Hope you have a great weekend, and we'll be back next week. Take care, guys.